it suggests that Ethereum could go to 20,000 on this cycle. Over time, I believe, and if you look at it, the adoption actually of market cap versus number of wallet addresses of Ethereum is significantly ahead of where Bitcoin was. Yeah. And you see the distribution of returns. Again, I put some of it on Twitter, and I've written this whole piece. I will do a piece for Real Vision Crypto in the next couple of weeks. It shows potentially that Ethereum is getting adopted faster, yeah, and will potentially have a larger market cap than Bitcoin over time. Again, I'm not talking about a flippening happening immediately, blah, blah, blah. I'm talking about platform versus asset, and a platform is often more valuable than an asset. I know that's highly contentious for some people. That's just how I see it. The other thing that I've spoken a lot on Twitter about is Ethereum, where I went back and looked at Ethereum and tried to understand it in terms of how it priced. You know, we have stock to flow and stuff like that for Bitcoin. And I realized it's basically just following Metcalfe's law, which is the kind of basically the more network connections there are, the more people in the network, the more it goes up in price, it's more valuable. And I also then compared Bitcoin. Now here's a killer one. I compared Bitcoin to Ethereum using when they both had 1 million wallet addresses, active wallet addresses. What was bizarre, it was exactly mapping the 2017 cycle. They were exactly at the same price. So Bitcoin, when it had 1 million wallets, was exactly the same price that Ethereum was at 1 million wallets, and they map each other exactly. It would give suggestion that Ethereum is just a delayed Metcalfe's law that follows Bitcoin with its cycles. We understand that because there's a substitution effect. More upside to come, then some big downside. In 2013, it then traded sideways for, 5 months, which was not what we're used to right now, but what gold has just gone through. And then it exploded in a hair-singeing rally that was truly mind-blowing. I think it went up 10x at that period. So I'm kind of thinking that's what we're going to see. We'll see. Things don't always repeat in the same way, but it gives just some contextual understanding. Now, volatility in Bitcoin is skewed to the upside, so the distribution is lopsided. Great, but there is still significant downside. I'm really mainly I am cryptocurrencies, and you and I were talking off camera. Even if Bitcoin goes halves from here in a usual corrective cycle, normally it's like 30 to 40% in these bull markets, but let's say it goes 50%. It goes back to 20,000. That's basically the beginning of the year. I mean, nobody really cares. It's okay, and just be used to that. That's why I've always said don't have leverage in the trade, but other things can get really smoked here. So be careful. Don't press the bet on this reflation trade, because I think there's an extremely high probability of a reversal. People need to be aware that Bitcoin is not a stationary ecosystem either. It's developing very fast, and there will be a whole crossover between what Ethereum can do and what Bitcoin can do as Ethereum 2.0 becomes a harder asset and looks a bit more like Bitcoin. Not the same, a bit more like. And the layer 2 solutions on Bitcoin look a bit more like Ethereum. There is going to be some competition, but I still believe they're complement products, not competition.
And obviously, price action. And that's not, Raoul gets scared as the meme, don't scare Raoul.
We can't, Raoul.
It's like, if there is a structural change in the pattern, here's something I've been thinking about that I don't think anybody's thinking through, right? Come all in, institutional investors, right? We want you in. But then we've got a problem, is we're going to have to start dealing with month-end rebalances, quarter-end rebalances, where they become massive sellers. If Bitcoin goes up 100% in a month, which we've seen many times in the past, they end up selling 50% of their Bitcoin. That's suddenly a massive supply change to the market. Maybe the structure of the market changes in a way that doesn't have the risk reward that we're all expecting, because we're all a bit backward looking. I look at my price projections from a number of different angles, but maybe the structure of bringing institutions in changes entirely, in which case the volatility gets massively dampened, the price spikes get dampened, and in which case you don't really outperform, let's say, emerging markets. That's a possibility that's out there that people aren't thinking through. The more liquid a market, the less the volatility, the less the upside. The upside is so big right now because nobody's in it. I would say that if China nationalized the miners or did something completely outside of our expectations before we can diversify the mining pool. I know people are trying to build it off gas flares in Texas and other stuff, which is great. If something happened there where somebody could control it, which I don't believe can happen, but all sorts of things I don't believe can happen. So there's something there would make me concerned. If I thought about what freaked me out in 2017 and why I got out early was people started forking the thing. We didn't know whether forks were going to work or not. Were they going to take half the liquidity and ruin the whole thing? I didn't know. So I'm out. So something of that kind of nature would make me think. I don't know what that is, but there's a lot of smart people developing a lot of things, and who knows what comes along. Obviously, regulation. Should the regulators completely change course? All I see is positive regulation. But if the IMF stood up and said, we've agreed to move to the central bank digital currencies, and as part of that, every member of this basket has banned all cryptocurrencies, and they come with prison sentences or whatever. Yeah, clearly, I'm going to change my mind. Well, I don't know. Will I change my mind? Not change my mind. It kind of makes a better case for Bitcoin. I was
going to say, there's two arguments there. The price goes down, or actually the price explodes upwards.
Yeah, I kind of value my freedom, and I value my freedom. I don't want to go into prison and still be monetarily free. So I don't know. It's difficult. It's difficult, and that makes me nervous when I can't find anything obvious. But my guess is, with a strong, powerful force like this, whatever will stop it is not obvious.
Another question that a lot of people had was, you've got this massive position, right, from a percentage base of your liquid net worth. What are the triggers that you would look to sell? So in a bull case, the price goes up, there's certain events that happen. So one is just like, what would cause you to sell or incentivize you to sell? And then two is, how would you structurally go about that? Is that a single trigger, I'm going to sell my entire position, or is that I'm going to sell into a bull market? How do you think about it?
Basically, the answer is when I talked about lifestyle tokens, okay? I am actually taking another huge risk is I've built and run a business, and that's been a risky, hardworking enterprise, and I don't take any money out of that business. I draw an extremely small salary. So for me, I have foregone current returns for future returns. So if Bitcoin goes up a lot, I'll take some chips off the table. And so then I can know, okay, fine, anything happens, I'm safe. I always trade from a position of security. And then I just run the rest. Yes, I would probably scale out over price objectives and hold a core position over time, because I do think it goes a lot further up over time. And so, can I suffer the downside? Will it be as large? Will it be a 90% downside this time? Highly unlikely. It'll look more like a commodity cycle, so probably 50%, 60%, but it could be the usual 3 or 4 years. I would happily participate in that, and just not worry about it. If I took some chips off the table, everybody's safe, I can do what I want to do, and I don't have to worry.